You're listening to Seattle Real Estate Podcast.
I'm Sean Reynolds, the owner of Summit Properties Northwest, Reynolds & Klein Appraisal, and your host of this episode of the Seattle Real Estate Podcast. Today, we are going to look at, I know it's a super specific podcast, but we're going to be looking at the Paycheck Protection Program Loan Forgiveness Application. And the reason I wanted to do this podcast is there's so many small businesses out there who are benefiting from the Paycheck Protection Program. That's the lifeline the federal government through the CARES Act has given small business to basically cover their payroll, cover some expenses, and get them on down the road until we reopen, consumers start consuming, and businesses start going back to normal, whatever that is. So today is Monday, May the 18th. That's the day Mount St. Helens exploded. I was in third grade. We were at Hector's Restaurant in Kirkland. It was very exciting. I had written, and this is, I think, was it 1981, 1980, something like that? Mount St. Helens just blew off the top third. That was crazy. But so we are Monday, May 18th, and on last Friday, May 15th, the SBA, Small Business Administration, and the Treasury Department, they released the Paycheck Protection Program Loan Forgiveness Application. So we're going to take a quick look at that. I want to just do an overview. So you out there who are small business owners, or if you work for a small business owner and you're helping that owner out with their PPP loan and how to use the money and how to make sure it's forgivable, because this comes out, the Paycheck Protection Program, it comes out as a loan, and then you got to apply for forgiveness for it to become a grant. And so this is the application that we're going to go over. And I'm not going to get too in depth because a lot of this stuff is rapidly changing. We're getting new directives all the time on, like last week, we had Secretary Treasurer Mnuchin indicate that if your PPP loan was under $2 million, then you've basically got a safe harbor. They're not going to look at you too closely as far as, hey, did you have the ability to borrow money elsewhere, like a lot of publicly traded companies do? If you're able to borrow money elsewhere and you're over $2 million, maybe you shouldn't have taken that loan. And I think the deadline for returning the loans was today, May the 18th, I believe. I know it's either coming up or it's today. So yeah, a lot of mid-sized companies that are publicly traded giving back that loan because they've got the ability to get money elsewhere. And this is meant as a lifeline for small business. So let's jump on in to the loan forgiveness application. These are kind of the overviews that I'm going to get into. You've got options for borrowers to calculate payroll costs using an alternative payroll covered period that aligns with borrowers' regular payroll cycles. And we'll get into that in a sec. The second thing is flexibility to include eligible payroll and non-payroll expenses paid or incurred during the 8-week period after receiving the PP loan. The third thing, step-by-step instructions on how to perform the calculations required by the CARES Act to confirm eligibility for loan forgiveness. And understand that this is an 11-page application. A couple of the pages in there are fluff. They're more explanation than anything else. But a lot of it, it's kind of this brutal little application process, and there's a lot to it. And you got to have all your stuff dialed in. And that's why I want to go over this overview so that there isn't a single company yet that's gone through their full 56-day period, because the first loans you could apply for were on April 3rd. I applied for mine on April 4th. I got my loan sometime last week. I think it was on Thursday of last week. And so nobody's had their loans for the full 56 days yet of the cycle. And so we're all kind of looking at these loans or these grants going, all right, here's what we should be doing. Here's how this goes. And one of the guys that I follow a lot is JJ, the CPA. He's got a number of great videos. I kind of look to him for direction. He's been putting out an incredible amount of content during this period. And he's also funny. One of his tagline is, "You never met a CPA like me, quite like me." And I believe that is a direct kind of nod to Kid Rock in a song that he had, kind of like that, but not really. It's funnier. So, all right, number 4 is borrower-friendly implementation of statutory exemptions from loan forgiveness reduction based on rehiring by June 30th. So, yeah, it sounds complex, but it's really not. It's basically stating you got to have everybody back in business or the equivalent of, or have explanations for why you didn't rehire people by June 30th. Just remember June 30th is kind of the deadline. Addition of a new exemption from the loan forgiveness reduction for borrowers who have made a good faith written offer to rehire workers that was declined. Keep in mind, this is the Paycheck Protection Program. So most of this has to do with employees. So you're an employer, you got these employees. This forgiveness application kind of works through, hey, what did you do? Here's the amount that you're eligible for forgiveness. The rest of this goes to a 1% loan. All right, so that's kind of the 5 major overviews, and we'll get into it. And you can find this application on the SBA website and also the Treasury website. It's not hard to find. You just Google it and it'll pop up. On the SBA page that I looked at, there was a bunch of this guidance stuff, and then there's this tiny little hyperlink, and the government always seems to bury their hyperlinks. I think they don't really want us to find this stuff, but it was a hyperlink to a PDF, and I printed out the PDF, and that's kind of what I'm going through right now. All right, so going through on page 1, the first 3 things that are kind of linked together are employees at the time of loan application. Got to fill that in. So when you applied, how many employees you had. Employees at time of forgiveness application. And that is when you were filling out this application form for forgiveness, how many employees do you have then? Third thing is the PPP loan disbursement date. So those are the 3 major things you got to have. And the loan disbursement date is when you got the funds. So for me, it would be last Thursday, May the 11th. Doing backwards math there. Hope that's right. You need to indicate the EIDL advance amount and the EIDL application number. Now, the EIDL, or EIDL, as it's commonly known, is the Economic Injury Disaster Loan. That was a loan up to $10,000. It was per employee that you had times $1,000. You could get a $10,000 basically grant. That reduces your amount of forgiveness on the PPP. And we all kind of knew that going into it. I did not apply for the $10,000, up to $10,000 EIDL loan. It just seemed like a lot more work. And I focused on the PPP because I've still got 2 businesses going, and to kind of handle all this. And then doing research for this podcast, I was kind of like, I really wish that I had all this podcasting stuff and other stuff set up for the last recession, because the last recession was based on housing, which I actually know. This recession that we're in right now, I don't know a ton about, the PPP loans, and I'm not a CPA, let's put it that way. Yeah, I took some college courses in accounting, but I'm not a college graduate. So a lot of this stuff goes over my head, and so I just try and understand it as best I can from the standpoint of a small business owner. All right, if I can understand this stuff, then hopefully the next guy can too. And here are things you got to watch out for. Or maybe I bring up something that's wrong, that you interpret it wrong. You're going to ask your next guy. You're either going to ask your CPA, you're going to do some research on it, you're going to ask your other small business owner buddy, because I've got a bunch of those, and I hit those guys up pretty often. Mainly my good friend Dan Flitch, who, shameless plug, has the Savage Moose in Kenmore sports pub, and also the Off the Rails sports pub here in Bellevue. I talk to him a lot because he's got to know way more about this stuff, because as the owner of a restaurant and a bar, his complexities are way more than mine. His businesses are set up in a way more complex kind of system with employees, and mine's pretty straightforward and pretty cut and dried in comparison. So if I don't know something, I reach out to Dan and, hey, Dan, what do you think? So, all right, the cover, and I'm going through right now is page 1, which are just basically instructions for this, for the forgiveness calculation. The covered period is defined as, and this is an important thing, the covered period is enter the 8-week, and that's 56-day covered period of your PP loan. The first day of the covered period must be the same as the PPP loan disbursement date. So mine would be as of May the 11th. That's the beginning, run 56 days from there. And it says, for example, if the borrower received its PPP loan proceeds on Monday, April the 20th, that's the first day of the period, and then it goes to Sunday, June the 14th, 56 days. Is that true? Yeah, I think that is. All right, whatever. The second thing is you can have the alternative payroll covered period, and that is for administrative convenience. If you run your business and you've got more than a payroll period every 2 weeks, you can do borrowers with a biweekly or more frequent payroll schedule may elect to calculate eligible payroll costs using the 8-week, 56-day period that begins on the first day of the first pay period following their PPP loan disbursement date. So you can start that rolling on the first day of the first pay period if you want to. So there's some of this stuff you need to understand and use it to your benefit. Whatever advantage you can get from it, go ahead and do it. That's why they're giving it to you, knowing that a lot of businesses operate differently and they're trying to give as many breaks as possible to small business out there and the different ways small businesses operate. All right, if the borrower received the PPP loan in excess of $2 million, you got to check that box saying, yep, over $2 million. You're going to get some more scrutiny there. And that's part of this application process. But for most of you watching this video, this is going to be a non-issue because if you took a payroll loan over $2 million, you've got a big shop. You've probably got some kind of in-house CPA or somebody that's going to be able to direct you on how to make that work. All right, that is that. On page 2, I'm going to run down to line 11, and that basically states, if applicable, the SBA will deduct the emergency disaster loan advance amounts from the forgiveness amount. We talked about that. That's just kind of what's going on. All right, so here I'm going to get into the costs that are eligible for forgiveness on this loan. Number 1, eligible payroll costs. Borrowers are generally eligible for forgiveness for the payroll costs paid and payroll costs incurred during the 8-week, 56-day covered period. So the big thing there is paid and incurred. Means you can't do it for the whole year and say, all right, I'm going to pay out now. Can't do that. It's got to be the worker's hours, worker's pay period, whatever, after you got your loan and through the end of your 56-day cycle. So I'm sure you understand that, but just make sure that you follow that super closely. Payroll costs are considered paid on the day that paychecks are distributed or the borrower originates an ACH credit transaction. I know what that is. I just can't really remember. All right, payroll costs are considered incurred on the day that the employee's pay is earned. So that's differentiating between when you paid it out and when it was incurred. Count payroll costs that were both paid and incurred only once. So you can't double dip. That is another major thing is you can't take the same guy's payroll and do it twice. They're going to catch you because as we'll get into later, you got to have documentation that covers the amounts that you're filling in here. You've got to be able to support what you're talking about. All right, eligible non-payroll costs. The first one is covered mortgage obligations, payment of interest. This doesn't include any prepayment or payment of principal, so just interest. If you've got a mortgage, you get to take your interest. Eligible non-payroll costs also include rent obligations, business rent or lease payments pursuant to lease agreements for real or personal property in force before February 15th, 2020. So you can't enter into a lease agreement after February 2020 and write that off as an expense and expect to get credited for that amount. The lease has to be in place before February 15th. The third thing is covered utility payments and business payments for a service for the distribution of, number 1, electricity, Number 2, gas. Number 3, water, transportation, telephone, internet access, for which the service began before February 15th. So on all this stuff, it's basically before February 15th, and then anything within that 56-day period is fair game. An eligible non-payroll cost must be paid during the covered period or incurred during the covered period and paid on or before the next regular billing date. One of the videos I watched on this is so an eligible non-payroll cost must be paid during the covered period. All right, what if you prepaid a bunch of your internet or your utilities or your phone bill, your cell bill? What if you prepaid a bunch of that? You would incur that cost, and is that an expense? Yeah, it is, but it's for future use. I don't think maybe that's an exemption. Maybe you can go down that road. I probably wouldn't until I got some more clarification, and that's why I'm saying this is kind of an overview of what we're looking at. It's not a super in-depth because a lot of this stuff is probably going to change by the time we actually get to doing these applications. And one of the things I keep hearing is that it's for so many small businesses that they're going to change up these percentages. 75% isn't going to have to be for your payroll. That's what it is right now, and only 25% can be used towards the other stuff. But I think you'll see that change. I think you might also see there's so many businesses out there right now who aren't even open, and they've already got their money, their PPP loans, and yet what are they supposed to use it on? Are they just like my buddy Dan with the bars? He's like, yeah, I'm going to have the cleanest bars ever because he's going to get his people back. He's going to put them to work, and one of the things they can do is clean and get going because they're not officially open. They're doing takeout, but that only requires a limited amount of people. So the more people he can get in there to get his payroll up and going, the more he can use that payroll, the better for him because it becomes then a forgivable amount. So I think you're going to see the time period over which you can use this extended out. I think you're also going to see the kinds of expenses switched out. Percentages of this money used for this, this and that kind of thing are going to change. But we don't really know that for right now. So for right now, as of the date of this video, consider what we've got to work with here on the application and go with that, run with that for now. All right, so then we've got on page 3 of this form, we've got the actual calculation form, and it kind of looks like an IRS form. It's kind of confusing. You got to really make sure you kind of know what you're doing here. I've looked at it. I mean, it starts off with what your loan number is, your lender, loan number, disbursement date, a bunch of stuff like that, what your payroll is. You start getting into itemizing stuff and doing percentages. And then on page 4, you've got a certification that states what all the money was for. You're basically stating you didn't commit fraud by taking this money. Page 5 is more instructions for the PPP Schedule A, and that is to do, here it is, the PPP Schedule A. So like you start off with enter cash compensation, and it's another worksheet, and it helps you kind of figure out what your costs are. I'm not going to get into that because I think a lot of that will change, but know that if you want to smartly use your PPP loan, look through this application because this is what you're going to be based on. Don't just spend the money on what you think you know in your head of what you're going to do. Really look at the numbers, figure it out, maybe watch some YouTube videos. Maybe watch JJ the CPA. That's my go-to guy. I have no affiliation with him whatsoever, other than I found him on the interweb on YouTube, and I watch a lot of his stuff because you've never met a CPA quite like him. And so we've got instructions for PPP Schedule A on page 7, more stuff. The exemption for full-time employees. So there's a way that you can get around. Maybe your business has changed substantially and you've got different employees, and that's okay. They don't have to be the same employees. But the bottom line is you need to bring everybody back or bring your employment numbers back by June 30th. That seems to be the big number that gets hammered on. Now, there are some exemptions, some exceptions for if something happened with your employee. Like the first one is they were fired for cause. If your employee is fired for cause, all right, you go out and get another one, fair game, no issues there. Or the second one is the employee voluntarily resigned or voluntarily requested and received a reduction of their hours. Maybe they just didn't want to work. Maybe they didn't feel comfortable doing their job in the COVID-19 environment, and they're like, hey, I don't want to do this. And so, I've had employees like that, and they're like, I want to still keep doing my job, but I want to do it from home. And in that case, they're still doing their job and still doing the same number of hours. But if somebody says, I don't want to do my job, I am voluntarily reducing my hours, then you as the employer, you can get an exemption for that. In any of these cases, include these full-time employees on this line only if the position was not filled by a new employee. So if you filled the old person's hours or position with a new employee, you're fine. You're totally good. Fair game. Any full-time employee reductions in these cases do not reduce the borrower's loan forgiveness. But they're also not counted against you, is my understanding. And so then we go through boxes 1 through 5, and then you've got the full-time employee reduction safe harbor. That kind of goes into what I was just talking about. Basically, by June 30th, you kind of need to have things dialed in. You've got another couple of worksheets. And then on page 10, and that's the last page I'm going to get into, on page 10, you have the documentation that you need to provide. So far, as we know it right now, you've got the documentation, and it's basically the same. It's basically the same documentation that you used to get the PPP loan. You just need to give the updated information. And in my case, it's basically a report from my payroll company. I use Paychecks. They're here locally in Washington, and they handle all of our payroll. My office manager calls in everybody's hours or whatever it is. And they figure out all the taxes and withholding and stuff. They take that responsibility. We pay them per paycheck, standard payroll stuff. But we're going to be getting, so you can either send in a bank account statements or third-party payroll service provider reports documenting the amount of cash compensation paid to employees. So if you're not doing a payroll service, make sure you've got documentation. And then also what I'm going to do is every one of the bills, like the utilities and the rent, we're going to have a statement, and then we're also going to line item it in our checking account. I am also going to be taking all my PPP money, putting that into a separate bank account so that I don't commingle funds, and it'll be super clear what money was used for what. And yeah, it'll be a pain in the rear on some of the automatic payments. I'm going to have to switch over the automatic payments from my regular bank account or wherever it is that I, debit card, whatever, that I make those payments out of, and then I'm going to have to assign it to the new account, but whatever. It's not a forever thing. We're going to have to do this for a couple of months. Yeah, is it a pain in the rear? Yeah. Is it going to take some more time on my office manager? Yeah, it is. But to me, in order to be in compliance with this whole thing and have a really good written record of what we're doing, that's what makes the most sense to me. And even though I'm under $2 million for the loan, I think you're still going to have a little bit of scrutiny. Somebody's actually going to sit down and look at all this stuff and go, okay, yep, you're in line. All right, we're going to forgive this amount. Or we're going to forgive your whole thing. You did a really good job on getting all your numbers together, and you used the money the way it was supposed to be used. So, hey, nice job, small business owner. Well done. We're going to give you that as a grant. All right, and so that is basically about it. And then it kind of goes also into the non-payroll, what you need to bring in. So either copies of checks or bank statements indicating, hey, I used this money towards this. Just be able to document what you're doing. And then each borrower must maintain but is not required to submit. You've got Schedule A worksheets and some other stuff that's within the application, but you just need to keep that on file. You don't have to send that in. The only things that you need to send in are some tax forms, if that's the way you're going, payment receipts, if that's how you're providing information or your payroll information from your payroll person or provider or whatever. So that is really about it. So it's 11 pages of form. The actual application itself is only a couple of pages. A lot of it's instructions, a lot of it's worksheets. It's kind of your standard government financial worksheet. It's a little bit more in depth. To me, it's kind of like doing a Schedule 1040, the tax form, the IRS tax form, and maybe with adding in one more thing, maybe like with one house with some depreciation, something like that. It's the equivalent of that. So you got to wrap your head around some concepts, and basically you got to understand how it works and spend your money wisely, spend it accordingly. So that is about it for me. I think I've covered everything, and as changes come up, I will certainly let you know. I know last week I did a podcast on the under $2 million aspect of the PPP loan, that if you got a loan for under $2 million, you're basically safe harbor and you don't need to worry about it. So check that one out if you had questions. But I think anybody who got a PPP loan, they're kind of keeping up on this stuff and they're looking to see what's out there and, hey, am I going to be okay? And so consume as much information as you can. If you're in question and you want to hit up somebody that really knows what they're doing, hit up a CPA. Don't hit up a financial guy like me, a real estate guy, because they're going to have a better understanding and they're going to dig deeper than I have. I've just kind of given you a broad overview of what's going on here. But hopefully the information I provided here helped. If you're watching this on YouTube, love to have you subscribe to our channel. And for those of you listening on the podcast platforms, thanks so much for tuning in. I really appreciate it. I will catch you on the next one. Thanks again for tuning in. Bye. Don't forget to subscribe to our channel and hit the notification bell so you'll know when our next video is out.